I'm back with more earnings charts. Yes, it's the Mag 7s this week, but we're getting a bunch of other really hot names, and I brought another 5 for you in this video. Let's not waste any time. Let's just dive right in. Okay, the second video is going to lead us off with drug stocks, Eli Lilly, ticker LLY. Now, in full disclosure, I own this now in Zacks Insider Trader because some insiders have been buying. We've had this narrow trading range now, and we even had, this dip here that looked pretty juicy here in 2025. So the stock is kind of pausing while we figure out what's going on with drugs in general and whether or not they're going to be tariffed. And then Eli Lilly having to bring some manufacturing to the US, which they are now doing. And then what is happening with the weight loss drugs? Will the pill be ready next year? And what are they going to charge for that? That's all up in the air too. But while it may seem counterintuitive that if they are forced possibly by the Trump administration to cut the price on the weight loss drugs way down to maybe $150, $200 a month from $500 to $1,000 a month, that they may not see as good as strong as sales or earnings. But imagine how many more people might take the drug if it was the lower price. So we will see what develops, but the analysts are pretty bullish on Eli Lilly. We have earnings up 75% expected this year, and then another 35% next year. That's this light blue line. And then look at 27, slight decline recently on the 27 estimates, but not much, and still nice, generous growth. Now, because the stock is trading in this range now and not making new highs while the earnings are growing, we are getting a more attractive PE on Eli Lilly now, down to 36 times. It was trading at like 80 and 90 times back here in 23 as the weight loss drugs took off, and 24 because the earnings hadn't quite gotten there yet. But now looking a bit more attractive. And on the earnings side, it has beat 2 out of the last 4, but it has been rockier in here. It is coming off of small beat of 12.5% last quarter. So we'll see what it says this quarter, but it's really about the outlook for 26 and whether or not that pill form of the weight loss drug is coming in 26. So I'm going to be tuning in along with everyone else. Eli Lilly, ticker LLY. Then we're going to switch over to a stock. I'm not sure how many times I've talked about it, maybe at least one other time. Howmet Aerospace, ticker HWM. And look at this chart. You would think this was an AI stock, but it's jet engine components and aerospace side of things. And look at that earnings growth. Earnings expected to be up 33.5% this year, 18.4% next year, and we have further growth expected here in 27. It is an earnings all-star. Just this one miss way back here, November 9th, 2020. That was forever ago. And so if they beat again this quarter, that will get wiped from the screen and we'll have a perfect 5 years. I'm liking their track record, so I'm liking the odds that maybe we will get another beat here. The stock is fairly pricey, though, even with this earnings growth, because it's not good enough on the earnings side, but PE of 55 now. So that's pretty stretched. And like we've been seeing with some other stocks, is it too stretched? This one's not really in a narrow trading range. We actually are getting a breakout going into this number. So we'll see, can it hold this? That's Howmet Aerospace, ticker HWM. All right, let's switch over to what is a AI infrastructure stock, MasTec. It's on the construction, heavy construction. MTZ is the ticker. And look at this crazy chart. It is on fire, trying to make a new high going into this number as well. It is an earnings all-star as well, just one miss back here in 23. And it is the beneficiary of all the government spending. If Eli Lilly is making a new manufacturing facility, companies like MasTec On the construction side, somebody's got to build all of this stuff. So everybody's building everywhere, it seems, and MasTec is benefiting. So I like the track record it has with all those beats, and earnings now expected to be up 60% this year and 23.1% next year. Stock isn't as cheap as it used to be just a couple of years ago, now trading at 33.6 times. But look at 2027. The analysts are getting very bullish on 2027 as well. So we'll see what they have in store and what they are reporting with their guidance. But this is a secret kind of hidden gem out there with the great chart. So that's MasTec, ticker MTZ. Then let's talk about one of the red hot names that used to never be red hot, Western Digital. Data storage, always kind of the boring part of tech, and not so boring this year. Look at this soaring here to all-time highs, while earnings have improved. So this is the line back here for 2024. Look at 2025. It's up big and expected to be up 35.3% this year and another 21.7% for next year. And then look at 2027, also looking bullish and on the rise. So this is the kind of earnings you want to see. And that's why you get the good Zacks rank. The analysts are raising estimates here. And what do the valuations look like? Just 19 times. So it is still fairly cheap with that earnings growth going on, even as the shares are soaring. And it's an earnings all-star, just 2 misses back here in 22 and 23. But otherwise, it's got its act together and it's been green ever since. So this is one that is going to be on people's radar, even though nobody cared until this year about Western Digital, but it's back and we will see if we can keep this momentum. And then we're going to finish it up with one outside of any of these industries on energy, Exxon Mobil. Both Exxon and Chevron are reporting on Friday. And so I just chose Exxon. I like where it has production. I like its chemical side of the business, but chemicals getting hit this year. But look at this chart. The shares have not broken down, and it has a nice little earnings streak here with 5 beats in a row, because that's what Exxon does. It's like very consistent and it knows its business well. But its business right now is struggling. Look at the 25 earnings chart, expected to be down 18.2% on weaker oil prices mostly, but also chemicals weak as well. And natural gas, not too shabby, but not enough to see much of improvement. Then 26, they are expecting some improvement, but still below 24 on earnings there. And then 27, back to normalcy, you might say. And so that's looking better, but it's all going to depend on that price of crude. And right now, a little bit too much crude sloshing around the globe, but we could work through that by end of 26 into 27. We will see. And that's kind of what the analysts are projecting here with those higher earnings for 2027. So what do the valuations look like? Trading at 17 times. That's because the shares haven't broken down like the earnings have. And so we're not really getting that really cheap PE like you might get when the earnings decline on the oils. Some of the other E&Ps are cheaper right now because they have broken down, but Exxon has not. It is one of the premier names, so people are holding on to it even during this difficulty. Its dividend is still being paid, so you will get that for your patience. And you have had to be patient the last couple of years on Exxon. But we'll see what they say as we head into 2026. And tune into Chevron as well, ticker CVX for Chevron, because you want to know what's going on with the 2 largest U.S. oil producers. So there you have it. Lots of different industries, and it's not all AI. And we've got a lot of breakouts, a lot of stocks trading at little bit stretched valuations. We'll see if they're bringing the goods this earnings season, because if they do, we might expect these rallies to continue into 2026. If the earnings are there, the buyers will follow. So be sure to subscribe to our YouTube channel to get all of these charts. I'm bringing them to you even after this hot week, because the earnings will continue to roll on. And yes, there's still going to be more stocks outside of the Mag 7 that we're going to want to look at for the next couple of weeks. Retail is going to be key. What's happening with the consumer and tariffs. We're already getting some few shaky reports from some retailers like Deckers so far, but we'll be getting more of those in the next couple of weeks. So find us somewhere, and I'll see you again next week with some more charts.